Most people think buying the bottom is hard, but if you ask anyone who's been through multiple cycles, they'll tell you, selling the top is even harder. That's because bottoms feel hopeless, but tops feel euphoric. Everyone's bullish portfolio is doubling overnight, and the idea of cashing out feels like you're making a mistake. You wonder if you're missing out on more gains, but what you have to realize is that tops are when the market is at its most risky. In December 2024, I shared a video the day I sold my alts. But over time, I've realized that more important than timing calls is understanding the why behind them, the logic that guides those decisions. So in this video, I'll walk you through my thinking process that led me to sell near the December highs and the set of indicators I rely on when deciding to exit. These aren't random guesses. They're part of a system I've built to help me stay grounded when the market gets noisy and emotions run high. If you find this helpful, don't forget to like and subscribe. It really helps the channel grow. Let's get into it. When it comes to selling, there's no single magic indicator that tells you exactly when to pull the trigger. The best approach is using confluence, several signals lining up to form a high-confidence setup. First, I'll walk you through the indicators that flashed right before I sold during the election pump in 2024. Then I'll share a few others I always keep on my radar. Let's start with market sentiment indicators. This is often the most obvious yet the most ignored. When the entire market is euphoric, it usually means risk is high. It doesn't mean prices won't go higher, but it does mean you should be cautious. You've probably seen this before, and if you've been in crypto long enough, you know the drill. When things feel too good to be true, they probably are. In late November, I sold my injective position when things got a bit too crazy. Pump fund fees were at an all-time high. Meme coins were flying. You had 14-year-olds launching pump fund tokens to rug, and people were loving it. That's not normal market behavior. Sentiment was off the charts. The fear and greed index hit 93 the day I sold. That's extreme greed. Historically, anything above 90 is a danger zone. Google Trends showed that searches for meme coin had spiked to 100 in mid-January. That is exactly when Bitcoin topped at 109K. If you've been in the space long enough, you know that kind of retail mania doesn't last. Sentiment indicators won't tell you the exact top, but they will tell you when things are overheating. When everyone feels like a genius, it's time to start thinking like a contrarian. Next is Thesis Invalidation. This is a rule I live by. Every trade must have a thesis. A reason for being in the position. I get out if that reason breaks. Take my SDX position, for example. I got into stacks in 2023 as a high beta play on Bitcoin. For months, it behaved just like I expected, rising as Bitcoin dominance surged. But by mid-2024, that trend faded. The build on Bitcoin narrative lost steam and SDX stopped outperforming. I didn't wait around hoping for a bounce. The thesis had changed, so I rotated out. No coin is sacred. If the narrative fades or the team fails to deliver, it's time to exit, and don't second-guess it. There's always another opportunity. Now let's talk about one of my favorite tools, Derivatives Froth. This one is called Open Interest Dominance. It looks at how much leverage is being used in altcoins versus Bitcoin. When open interest in altcoins starts to exceed that of Bitcoin, it usually means retail is overexposed and leveraged long. That's a red flag. We saw this in both March and December 2024. Open interest on alts spiked past Bitcoin, and within days we saw cascading liquidations. Big players used that opportunity to exit. Once you spot that kind of imbalance, don't get greedy, take some chips off the table. It doesn't mean the market crashes the next day, but it tells you risk is elevated. This indicator helped me preserve a big chunk of gains in 2024. Another indicator I keep an eye on to spot local tops is the Altcoin Season Index. It is a tool used to gauge the performance of altcoins relative to Bitcoin over a 90-day period. When 75% or more of the top 50 altcoins outperform Bitcoin during this period, it signals an altcoin season. This is typically an indicator that altcoins are experiencing strong bullish momentum, and it can be a useful signal for spotting local market tops. When the altcoin season index rises above 75, it suggests that altcoins are overperforming and could be nearing the peak of their rally. If you look at previous rallies in January, March, and December of 2024, the index broke above 75, coinciding with altcoin peaks during those months. During such times, it's often a good strategy to consider taking profits or reducing exposure, as the market may be ripe for a correction or a shift in momentum. This doesn't mean you dump all your altcoin bags and move entirely into stables. We can spend several weeks or even months above 75 during strong bull runs. In both the 2017 and 2021 cycles, the index stayed above 90 for over 3 months during the final phase of the rally. That's why it's important to rely on multiple indicators for better decision-making. Technical overextension is another powerful sign that the market is running too hot. You'll notice this when price action starts going vertical. Candles get bigger without consolidation, especially on higher timeframes like the weekly chart. That's not healthy price action. Bitcoin did exactly this in late December. It went parabolic. No dips, no sideways action. That's usually not sustainable. When markets rally with no support zones below, the pullbacks can be brutal. Add to that, BTC dominance started breaking down while altcoins exploded. This kind of alt-season rotation often marks the final euphoric leg. It's great if you're early. Dangerous if you're late. RSI is another tool I use in this phase. When it's extremely overbought across daily, weekly, and even monthly timeframes, the market is likely running on fumes. It's not a sell signal on its own, but in context, it helps confirm the exhaustion. Finally, we have smart money distribution. This is where on-chain data really shines. You can track what the big wallets are doing. First, whale wallets. If addresses holding 1,000 plus BTC start reducing holdings while smaller wallets are loading up, that's smart money exiting into strength. You are the exit liquidity. Second, when long-term holders start sending coins to exchanges, that's a red flag. If a coin hasn't moved in months or even years and suddenly appears on Binance, it usually means someone's preparing to sell. Tools like Bitbo and Glassnode help track these kinds of inflows. For example, long-term holder supply dropped from 16 million near the 69K top to 14 million when Bitcoin hit its all-time high of 109K. That's a clear sign long-term holders were selling into strength. Supply changed hands, and smart money took profits while retail chased the pump. Third, stablecoin reserves. During strong rallies, stablecoin balances on exchanges should go up. That's new capital coming in, but in December we saw the opposite. Prices climbed, but stablecoin reserves fell. That meant there was no fresh buying pressure, just recycling of existing capital. Put all three together, whales are selling, long-term holders are exiting, and new money isn't coming in. That's not sustainable. When I saw these signs in December, it wasn't about calling the exact top. It was about managing risk, selling when the odds were no longer in my favor. No indicator is perfect, but when enough of them flash together, you get clarity. That clarity helped me sell near the top and buy back lower when others were panicking. I'll drop links to the tools I use in the description so you can track these signals yourself. And I'm working on another video covering the exact indicators that helped me buy Bitcoin in the 20Ks during the 2022 bear market. Make sure you're subscribed so you don't miss that. If keeping up with all these signals, indicators, and on-chain data feels overwhelming, just follow us on our socials. We break everything down in real time so you're always up to speed in the fast-moving cryptoverse. Thanks for watching, and I'll see you in the next one.